Let's start off with some of the numbers. We saw revenues from energy sales declining around 14.7% year on year. It's clearly about the company's overdependence on hydroelectric power. Give us your perspective, because you're talking about things looking far better, so perhaps slightly more optimistic for the second half of this year.
Yes, it is true. Our earnings dropped by about 46%, as you have just said. And this is because under the new power purchase agreement that we have with KPOC, we have a take-or-pay power purchase agreement, but we also have a threshold in terms of how much energy we must provide to them. And if we don't meet that threshold, then we get adjusted, which is what happened. As you know, 2009 was one of the worst years in terms of hydrology in Kenya. And the Masinga Dam, which is our main reservoir, we had closed it down for some time because we could not generate from there. And this is what resulted in us not being able to give enough energy. This is, as you have just said, indicative of the fact that we are very dependent on hydro generation. And this is going forward what we are aiming at, to move away from hydro generation and move to more other modes of generation which are not dependent on the weather.
Well, that's interesting. You're saying move away and look at other opportunities out there. What is on the cards right now? Because we know that hydropower accounts for around 70% of the units you generate, of course, and also the fact that your plants are concentrated within one area, which of course creates far more, a lot more risk factors that of course affect the company's bottom line.
Yeah. Yes, as we have said, we have planned our development over 3 horizons. The first horizon, which is between now and 2012, which we intend to put up a few more thermal plants, and some of them which we are already in the process of commissioning, because this was being funded from the infrastructure bond funds that we raised last year. The Horizon 2, which is really our main growth area, is mainly going to be geothermal. And as you are aware, the Kenyan government has actually set up a separate company, Geothermal Development Company, which is going to go and do the development of the steam. And what we do ourselves is to make sure that, yes, we follow them and expand on the geothermal. So geothermal is really going to be the direction that we are taking, to move away from being dependent too much on the hydro resources.
Well, just looking at some of the projects that you have completed during the financial period, we're looking at Kiambere, of course, Olkaria 2, and of course Ngong as well. Tell us about future projects. I mean, obviously you're talking about geothermal projects coming to the fore. When do you expect to see those projects fulfill their mandate?
On geothermal, we are looking at Olkaria 4 and Olkaria 1 and 2 refurbishment, and we are looking at 280 megawatts out of that, which we hope to be ready in 2012-2013. We have actually secured all the financing for that, and we are hoping, and we are on track as far as that project is concerned, so that will be on course in 2012-2013. But going forward, we are looking at Menengai, where the GDC, the Geothermal Development Company, is already starting drilling there, and we hope that we can be able to put up another 140 megawatts there in 2014, 2015. And we have a lineup of geothermal projects that we hope to put up between then 2014 and 2020, a total of 1,260 megawatts of geothermal.
Well, Eddie, also just looking... Yeah. Can I just touch on your market share quickly? 47.5% from 61.4% in 2009. Of course, independent power producers coming to the fore and slicing up your market share. How do you plan to change this? I mean, I know you're talking about your geothermal strategy, which, of course, if it does come to fruition, it could change the company and, of course, the strategy for the company quite significantly.
Well, our market share right now is about 70%, 75%. Yes, it has gone down. But of course now with the growth that we are anticipating, we intend to go back to our market share of about 80%. And because of the growth which is anticipated, the IPPs will still be there, and we are hoping that there will be more IPPs who will take the balance of the 20%. But as KENGEN, we do intend to to defend our market share, and we hope that we can be able to retain it at about 80%.
Well, it is interesting because the reports I read say that your market share is around 50% at this point in time. Unfortunately, we'll have to pick it up at some other point. Eddy, thank you so much for your insights this afternoon. Much appreciated.
Thank you.
And of course, Eddy Njoroge, Managing Director at KENGEN.